what I'm going to talk about today is I'm an investor. So I invest in businesses rather than I have started businesses and like I have startups as well, but I spend most of my time looking at investing in other businesses. So I hope that I can give you some value today. And thanks very much for inviting me, Anton, Kostya, everybody, for letting me try to present here today. I appreciate being invited. Thank you. And I'll try to offer some value here. And I hope that the idea is, I think that when you're building your business or even just thinking about what business you're going to start, hopefully you can see it from an investor's point of view. So one day, if you're wanting to sell the business, you can start thinking about all the things you can do to make it more attractive for an investor. So I'll go through exactly what I'm looking for in an investment, and hopefully that gives you some ideas on what you guys can do yourselves. So how I should start is probably why you should listen to me. Like, I'm no visionary, I'm no genius. But I've done a lot of work in the investing world, and I've studied a lot of companies. And my backstory is that I started an e-commerce business like 10 years ago, selling fitness equipment online, and I bootstrapped that from nothing, grew that to a successful exit, and I all of a sudden came into a pile of money that I obviously wanted to invest and use that money wisely and not just squander it and make it all disappear. I wanted to figure out a way to keep that growing rather than me, buying something stupid. And I've got some notes here. I scribbled some stuff down yesterday. So I started a YouTube channel as well to sort of document my my investments that I make. And a lot of my investments I make are actually in the stock market, but I would consider them very small companies, but they're still like publicly listed. But I have some private companies as well. So I think I've studied now, it'd be over 500 companies I've looked at in like quite significant detail. There'd be thousands of hours of studying businesses. So I've looked at all the different models. Some of the things I've looked at include, I've got a big list here. Options trading, real estate, stocks, bonds, angel investing, forex trading, silver, gold, oil, crypto, music royalties, crowdfunding, sports betting, and even collecting whiskey. I've studied all these different business models over the years. I've invested in some. I've done a lot of work in all these areas, and it got me to a point where I have personally invested some bad investments I've made, but some very good businesses as well that I've invested in from all different parts of the world. So America, Australia, England, Sweden, Norway, Canada, China, Japan. I have investments in all of those countries now. And today I'll try to present to you what I'm looking for in like what I would call the search for the perfect business. And this is hopefully I'm going to cover. When I talk about like the stock market and businesses, they're actually quite interchangeable. I think a lot of people get this confused that when you're buying a stock on the stock market, you are actually buying a part ownership in a business. And that's how you have to treat any of your investments that you make. The way I sort of think of it is like, this is a good example here in this restaurant. If you were to invest in this restaurant, what information would you want to know before you put money into this business? You would want to know who are the other owners. You'd want to know how much money the restaurant makes. You'd want to know what is the competition like? Who is this restaurant competing against? You'd want to see their track record. If they've just opened, that's fine. But like, I want to see this through multiple seasons, multiple years to see whether this can withstand the test of time. What would make this restaurant particularly better than everybody else's restaurant? And what if this restaurant had a huge amount of debt and they might struggle to repay that debt? I'd want to know that if I was to go into that investment. So these are the same questions that I ask when I'm going to invest in a public company, like on the stock market, or any private business. It's the same questions. I'm going to take this from Peter Lynch. Peter Lynch is like this famous investor, and he's got a very good book called One Up on Wall Street. But I think he makes this point really well, which is generally what happens in investing, and it gets a bit of a bad reputation, is that people seem to spend more time researching their next washing machine, their next laptop, their next camera, more than they do their next stock investment or their next crypto investment or whatever investment they're going to make. They don't spend anywhere near the time that they should. I actually honestly know someone, one of my friends, he invested $50,000 into a stock investment, and I think he spent maybe 15 minutes thinking about it, and he spent about 5 weeks researching a surfboard. And I always like joke to him about this, like, what are you doing? Like, you should be spending 5 weeks on the investment that you're going to spend $50,000 in. Anyway, but that's generally what human nature is like. So if you take nothing away from what I'm going to say today, please spend some time thinking about the investments you're making, and do as much research as you would into another purchase in your life, like a TV or a computer or something like that. If you start with that mindset, I think people will make a lot less mistakes. Okay. So the next thing I wanted to talk about was you might be wondering, like, why businesses and stocks compared to something like real estate or crypto, and there's a million other investment opportunities out there. Like, why specifically businesses and stocks? Well, this is sort of how I see it. A good business makes a lot of money by adding value to the world. So obviously, like, we want something, but you don't have the time or the skills, and you don't want to make it yourself. Let's go the example of McDonald's, right? So if I want a burger, I could raise a cow, kill the cow, cut up the meat, cook the meat. I could grow wheat. I could process it. I could create the bun. I could grow lettuce, and I could grow tomatoes, right? I could do that all if I really wanted to do that. Or I could pay $4 and go to McDonald's and get a burger, and it's all done for me. So the business of McDonald's creates a lot of value to me as someone who wants something that would be so difficult and so much effort for me to make myself. And another type of business is like a software business. Since there's a few software people here, I could like manually pull the data from my bank statement and put it in, like write it all out on a piece of paper and keep my record keeping for my business. Or I could pay $30 a month to have a software provider automatically pull my transactions and put it into a document for me. And that would save me a lot of time. So businesses save people time and effort. That's why I like businesses. And compare that to something like crypto or real estate or lots of other things, gold, silver, oil, all these things. A business, you've got control over how you generate that value. So you can expand into more locations. You can create new products and services. You can just go out and get more clients, and you can grow the business through your own effort if you wanted to. Investing in something like crypto or a house, maybe you can do renovations and things like that. There's at least some effort you can put in, but a business, you can go from a very small thing to something very, very big, and you don't get that opportunity in, say, one particular house. The house is going to go up in value in a good market 10, 15% per year. That's great. But a business, you can really move the needle. Like, you can really go from something small to something multiple millions of dollars. And you've got levers to pull. You've got more control. And I think that's why I like businesses the most. And that sort of appealed to me. And I think there's a bit of a reason why the richest people in the world are all owners of businesses. They've realized that they can leverage their skills and their effort to grow something far bigger than any other investment would. So for me, after all of this research, the investing world, the business world has just felt more comfortable with me. It makes sense to me the most. It suits my personality. It aligns with my moral compass as well. I told my friends this the other day, like, I wouldn't invest in like a cigarette company, for example, because I don't think that's good for the world. I wouldn't invest in strip clubs for the same reason. I don't think they're great for the world. I saw some eyes glaring at me there, but that's just my personal preference, and I don't judge anyone else's methods. And I'm just going to present to you what's working for me and how I think about investing. Okay, so my investing style is I'm very long-term focused. I think that's really important because there's no billionaires that have ever been made by trading in and out of companies. They've all been able to give the business a chance to grow and go from something that was once small to something that was once big, and they didn't exit along the way. And I think that's probably the worst thing you can do as an investor is sell out before the thing gets really big. So I'm very long-term focused, thinking 10, 20 years out if I can. 20 years. Yeah. That's sort of, I think I get a big advantage over thinking that far ahead. If I can sort of think, will this business still be standing? Does it have a long way to grow? Can this be going in 20 years' time? If I'm thinking like that, most people aren't thinking like that. So I feel like I get an advantage there. Another thing is I'm willing to look into places that a lot of people are not willing to look. And that gives myself the opportunity to find like great businesses in quite overlooked markets. For example, I'm willing to translate Japanese documents to find out about Japanese companies. I'm happy to do that. I'm happy to fly to Sweden, get the Swedish documents translated into English, meet with the CEOs, and figure stuff out for myself if I have to, rather than just hearing what people are talking about online. I'm willing to essentially go that little bit further to find out what's really going on. And I like the stock market a lot because unusual things happen in markets, and like stocks can go to unusual highs and luckily unusual lows as well. And this is where I can find like high quality businesses that are significantly mispriced. And I spend a lot of my time looking for those opportunities. I guess that leads to the question is about mispricing. Like, how do I know if something is a cheap price? Like, is it what would make it some? How do I even know that it's like below its fair value? So I think that's what all investing really is anyway, is finding the value of something, like doing your work, finding the valuation of something and buying it for less than its value. And then you're going to have the stomach to wait as well. So the skill set that I think I've been able to refine over the years is this ability to hopefully accurately, well, as accurately as possible, get quite good at finding the real value of things, of businesses. And once I feel like I understand that, I know when there's an opportunity by understanding its valuation. But to get to that point, I really firstly have to think about what makes a perfect investment. I'll actually send out in the group in a moment, I'll send out my notes so you can have this list that I'm about to read out. So you all have it so you can think about this yourselves whenever you like. Okay, so if I'm going to invest in a restaurant, if I'm going to start a business, if I'm going to invest in a stock, here are the things I ask myself. First thing I ask myself is, what is the quality of the cash flow that business is generating? So for the restaurant, for example, I'll use it as sort of like a good example of the business and how I'm going to answer these questions. So yeah, the first thing I look for is the quality of the cash flow coming in, the competitive advantage that the business has, and how durable that competitive advantage is, like how long that competitive advantage can last. Next thing I ask myself is, how big is the runway for growth? So how long can this thing grow for? How good is the management team, the people who are running that business, how good are they? And then eventually I get to the point where I ask myself, well, what is the price that I'm going to invest at? And is that a reasonable price? So let's talk about the cash flows, like the quality cash flows. I think that's probably the most important thing, because that is the first thing I look at. If it doesn't meet at least most of these, I'm probably going to rule out this as an investment. And I'll explain with the restaurant as an example of how I do this in my head. So hopefully this helps you guys. The first thing I want to find out is whether there's any contracts in place. So contracts with the customers. So at a restaurant, I have no contract to eat here at this venue. I can go to any restaurant I want at any moment, at any time in my life. So the quality of the restaurant's revenue has nothing to do with contracts. And I would say that's a negative, because I can't predict that there's money going to be coming into this restaurant. The next thing I would look at is whether there's any long-term visibility of that revenue coming in. And I don't know if anyone here has been a restaurant owner before, but like you don't know how many people are going to come into your restaurant each day. Like you could get 3 people, you could get 30 people, you get 300 people. It's a lot of variation there. And that makes the business very difficult to run. And it makes it difficult to invest in because you don't have that visibility. You don't know what's coming. The next thing I look for is what I call is the cash that's coming into the business, is it mission critical for the customer? For example, do I have to eat at this restaurant? Well, no, I don't. I can cook my own food. I can eat anywhere else in Bali. It's not critically important to me to eat here. But I'll give you an example of something that would be critically important. Okay, let's say I was on a construction job, like building a house, okay? And I had a particular machine that I was using to dig the ground, like an earth-moving machine, okay? If that machine breaks down, everything stops, right? So all the construction stops. I have to wait to fix this thing. That is really important that the person who is fixing that machine comes on time, does a good job, fixes the machine. That is critical to the business. So that is more interesting to me than if I eat here or I don't eat here. It means really nothing to me as the customer. Okay, next one. A diversified customer base. What I mean by that is if I had a business that was relying on one particular customer, that's of high risk because if they go bankrupt, that business goes bankrupt, whatever. My business now is in a big problem. As a restaurant, it's actually pretty good because I have lots of different people coming all the time. There's lots of diversification. No one particular customer is spending 90% of my 90% of my money that I make every day. It's all split amongst lots of people. That's a good thing. So I'm looking for businesses that have this like diversified revenue. Okay, next. The customers are in undisruptable industries. Let me try to explain this one. If I had a business, like a software company that was serving lawyers, just lawyers, okay? Now that might be great if I had lots of different lawyers, but do I really believe that in 3 years, 5 years, 10 years time, the legal industry is going to be the same? I highly doubt it. With AI developments and things like that, I would say that the lawyer industry has a lot of disruption coming, and that makes me worried if I have a business that's just focusing on lawyers. The restaurant is a good example of something that is the customers are, I think, I would imagine that people are still going to eat out in the future, that people are still going to meet with each other and have coffees and things like that. I would argue that the restaurant's probably okay from that point. Next one I would ask myself are the customers happy? So the restaurant would have to figure out, I would say, whether their customers are like truly satisfied with what's going on here at the cafe. I'll give you an example of a business that has unsatisfied customers. PayPal, for example. I don't know how you guys think of PayPal. I hate PayPal. It sucks. I can't use it every time I change countries. It blocks me out. It's a pain, right? As a customer of PayPal, I would do everything I can to leave PayPal. And I do. I've left PayPal many years ago and I will never go back if I can. It's because I don't like the service. I don't like what they're providing. So I only want to invest in businesses and I'm looking for investments where the customer is happy because that gives me some assurity that the long-term prospects of the business look promising. PayPal's a great business though for a lot of investors, not for me. Okay. Next thing is recurring. So do the customers continually pay me regularly every month or every year? And for a restaurant, no, there's no recurring nature to that. I could come to this restaurant once, I could never come back again. Being in Ubud, there's a lot of tourists here, so they're coming and leaving, and there's no recurring nature to my clientele. But if I did have some customers that were coming here regularly, I would want to really look after them because that gives me some recurring revenue at least. A good example is Netflix. Netflix, you pay every month, and however much you use the service or whatever, you're paying your $20 a month. So that's a good business model that I like to see. Next, I like to see it growing. If it's growing, obviously a lot of things are going right. If the business is growing, it's as simple as that. So I want to see the last few years, I want to see it going from $100,000 of profit to 200,000 to 300 or 400. Like, I just want to see some progression, that it's moving forward. It means that things are going better than if it's in decline, of course. The next thing is the cash flow up front. Now, this is more of a nice to have rather than a super important thing. But what I mean by cash flow up front is you get a big advantage in a business if you get paid before you deliver the work. Netflix being another example here. You pay the $20 at the start of the month, and then you use Netflix for the month. Rather than the other way around. So imagine if you got Netflix for free, watched it for a month, and then had to pay the $20. How many people would actually pay the $20? So many people would drop off. There'd be huge churn. It just makes a huge difference to the business if you get paid first and then deliver the work, something that I like to look for as well. And the last thing I like to look for is high margins. And a high margin business is, if I go to the McDonald's example for that burger, that would cost me $4. If the ingredients and all of the costs that go into making that burger were $1 and I was able to sell it for $4, that's pretty good margins, right? So like if something goes wrong with the farm, or the beef prices go up, or something that is out of my control happens to the business and my costs get higher, well, I have lots of room. So it might go from $1 to make the burger to $2. It's double. That's a significant price change to my costs of making the burger. But because I'm selling it for $4, I'm going to be okay. A big difference is when you're making something for $3.90 and selling it for $4. You don't have any room for mistakes. If something goes wrong with the cows, with something, all of a sudden you're losing money and the business is in trouble. So I want to see these like big margins in a business. And there's 9 things that I spend a lot of time focusing on when I'm looking at an investment. They're not the only things. Some of the other things I look for, which I'll just touch on briefly, are the competitive advantage that business has. For example, this restaurant, what competitive advantage do they have? They serve Ukrainian food. Now, that is a competitive advantage because not every restaurant serves good Ukrainian food. So that is something that's great. But is it enough? Is that enough of a competitive advantage? Because really, I don't feel like Ukrainian food every day. Sometimes I want Italian. Sometimes I just want to cook at home. Sometimes I want something else. So it's a competitive advantage. Whether it's a strong competitive advantage or not is up to debate. And that's where, I guess, studying businesses over and over again, you start to realize what's a real competitive advantage and what isn't. And that's something that I think is really important. Next thing I look for is the runway for growth. So this restaurant, how many more of these restaurants can they grow? So maybe they need one in Canggu, maybe there's one in Uluwatu. I don't know. There's probably some growth that can happen through expansion. I know Mason in Canggu, the restaurant down there, they just expanded to Uluwatu. So if I was an investor in that business, I saw that they have essentially doubled their size. That's good. That's good to see. But is it obvious? For me, for a restaurant, I don't know. It's a very competitive space. There's a lot of restaurants around. It doesn't seem so obvious to me that they can grow. I could be wrong, but there are definitely businesses out there that have an easier pathway to grow. That's a lot more obvious. The next thing I look at is the management team. So are they honest? Are they smart? Are they thinking long term? Do they have the same incentives as me as an investor? So if I'm an investor coming in to invest in the business, I want the person running that business to have a big ownership in the business as well and not be paying themselves a huge salary and there's no profit left over because they're paying themselves so much. If that's happening, I don't really want to invest because we have different incentives. They're doing it. They're running the business to make money. I'm doing it for a long-term investment. It's all of a sudden we're misaligned. It's a different business for me that I don't want to invest in. So I want to make sure that they're okay with debt. They don't have huge amounts of debt. That's something I wouldn't want to invest in. I don't want to see them trying to grow too fast because they can get into trouble growing too fast. They can spread themselves too thin. And I don't want to see them expanding into a totally different industry. So if I was to invest in this restaurant and they're going to get into daycare or into, I don't know, yacht rentals or something like that. That's an extremely different business model where you need a different set of skills. And I don't want to see the business that I'm investing in go completely on a different direction like that. That's not what I invested in. So, all right. So they're the things I look for. And I'll give you an example now of a business that I have invested in that I think ticks nearly all of those boxes. It's a publicly listed company. Anyone can invest in this company as well. You would have to do your own research in this, but for me, it ticks a lot of my boxes. And the company is called CSAM Health. It's a medical software company based out of Norway, and they provide the software solutions for hospitals in Oslo, medical centers throughout Norway. It's all in the Norwegian language. They have these, it's a really beautiful business because they have these really long-term contracts with hospitals and the government. So it makes it very safe. They have a very easy pathway to grow because they can just go into more and more medical centers as they open up. Plus, inside the hospital themselves, it's really difficult to change software if you've, like, all the doctors and nurses, they've been running their business, they've been running their daily operations on this software. They use it all the time. It would be so dramatic to pull that software out of the business, replace it with a new one. Then you have to train everybody on that new software. So if this software is already working, there is no reason to change, right? So it makes the hospital customers for this software company really sticky, and it's a really great business because they're not going anywhere. They have these multi-year contracts in place. Revenue's very predictable. They have these high margins because software doesn't cost anything to produce. You just have to hire all the software engineers, which are actually expensive. So I guess there are some costs involved, but it ticks a lot of my boxes, this type of business. And that's what I spend my time really doing the deep analysis on, like a company like that. And yeah, I hope that gave some sort of example of a real case example anyway, of a business that I've actually invested in that ticks all these boxes. So Natalie asked this question to me the other day. I asked my friends 2 days ago, I said, hey, like, is there any questions you guys have that I can just quickly answer that would make sense for everybody? And Natalie asks, like, where do I even find this information? So the information for me, that where I get it all from is, well, the companies, obviously, especially if they're a public company, they issue reports every 3 months. So I read those. I watch interviews on YouTube with the management teams if they've done any of those. If they don't have those, I'll contact the CEO and interview them myself for my YouTube channel, but mostly for me. And I try to find, there's a lot of smart investors in the world, and I try to read, like, their research papers and their documents and whatever they're putting out online about that company. Sometimes there isn't much out there about it, so I have to do a lot of the work myself. That's okay, but that's where I'm sort of at least starting the process of my research. Is that's where I look to get that information. Next question was, how do I buy into a business or the stock? Like, how do I actually do it? So if it was a restaurant like this, like a private business, I would need to negotiate with the owner. So I would have to create a deal. Like, so they might own 100% of the business. That might feel like a lot of risk to them. They would love to sell 20 or 30% of that business to somebody. Like equity. Yeah. And if they want to sell a little piece of that business, then that's where I can go, okay, I might want to buy 20% of this restaurant, and let's talk about, then I'd have to negotiate a price, like what I'm willing to pay. Now, price is actually really important. So you can imagine, let's say this restaurant is making $1 million a year in profit, right? And it made $1 million last year. It made $1 million the year before. It looks like it's going to make $1 million this year. It's quite stable, right? Let's say I'm pretty confident that this will continue on for at least a few more years at $1 million a year. How much am I willing to pay for that business? Well, I'm definitely not willing to pay $100 million for that business, for a piece of that business, because it's going to take me 100 years to get my money back. And that would be a terrible use of my money, of course. But would I pay $1 million, $2 million to buy into that, to buy that that business, if I bought the whole thing. And so maybe if my payback time was 2 years, right? I paid $2 million to buy the business and I get my money back within those 2 years. That could be very attractive for me as an investor, because after those 2 years have gone by, everything on top of that is going to be my profit in that investment. So I think of things in like my payback period. So how much time is it going to take to get my money back? I'm looking at it to be under 5 years. The better quality the business, the more confident I am that that is actually going to play out. I would feel very nervous about investing in a restaurant at, say, something like 5 times its profit. Like, let's say I paid $5 million for this restaurant that was making $1 million a year. I would be quite nervous in that because I'm not confident that I can predict out the next 5 years that it's going to be as stable, like $1 million a year for 5 years. So much competition that could come in, all that research that I've done previously to say that they don't have a strong competitive advantage. Maybe they do, but I haven't found that yet. And that would mean that I'd want to pay a lot less for the business, and it could still be a really good investment. It's all about that price that I'm going to pay at the end of the day as well. So that's really important to really think about the price you're paying for something. It is all about how much money you're going to get back. And that's sort of how I think of it. If I was to look at something like crypto, I have no idea how I'm going to get my money back out of crypto. And because the crypto thing itself isn't generating the money, I don't know how to value it. There's going to be people here who have invested into crypto. They have their methods of figuring out what its value is. That's not for me. That's not how I do things. I don't understand how to make that work in my head. So I have a hard pass on something like crypto. But for businesses, it feels like I can make that calculation. Next question was, that was about a private business. If I was in a public business, like a stock, like CSEM Health or something like that, that's a lot simpler. I use Interactive Brokers, which is an online brokerage company, and that's my main stockbroker that I use to invest with. For those watching on YouTube, there's a link in the description for that one. And how do I decide how much to invest is a common question I get asked. It depends on the opportunity. So if there is an amazing business that I think has like ticked all my boxes, I'm really confident that I can predict out its cash flow for the future, it's at an amazing price, I might invest 10, 20% of my net wealth into that business. That would be sort of what I'm looking at. But generally, I'm looking to be more conservative than that and maybe take a 5% position. And if I still think it's more attractive in the future, I will add more to it as I go. But I generally start with 5%. That's just my own personal preference. I'm quite conservative. I don't want to take a big swing into something that, unless I've really spent almost years doing the work and really understanding it. So that's how I start. I start with 5% investments. Okay, this is the last little bit here. I'll try to summarize it here in a moment. So yeah, I feel comfortable with around about sort of 15 investments in total. Somewhere around that, 10 to 15 is sort of my ideal range that I'm looking at. I share my stock portfolio and its performance on my YouTube channel if people wanted to watch that and see how that and track that along and see how that goes over time. The main thing that I think that I want you to take away from this is, I think just trying to figure out what type of investor you are. If you are looking to be an investor, like what appeals to you, what's easiest for you to understand. I sort of found something that I understand, but there's a million ways to make money here and there's a million ways to invest, and you've just got to find that thing that like you understand. So I really admire people who get into real estate because it's something that they really understand and they feel comfortable with, and that makes them sleep easy at night, and that's really important to investing as well. So I think just focus on the thing that you understand the most and feel comfortable with. That's probably the best advice I could give. And try to resist investing in some sort of crypto shitcoin thing that just because you heard you heard online that some crypto whale is going to invest in this coin. It's trending on Twitter. Your friends telling you about it at a party. 9 times out of 10, that's going to end badly for you. So I highly recommend doing your own work and doing your own research and making sure you feel comfortable. Like imagine like a photographer. There's a few photographers here. The amount of time you must spend on researching a camera or a lens or it would be quite significant, I would assume. You've done a lot of work in understanding cameras. That's how you should treat an investment in a stock or in crypto or whatever it is. That's how you should treat it. Really put in the time and effort to really do the research. Think of it like a photographer buying a camera. That's the type of level of research you should do. Okay, so the list that I mentioned today, like I said, I'll share it out with everybody. That's the things that as an investor that I would be looking for in a business that makes it really attractive, that would demand quite a high valuation in a business that ticks all of these boxes. And if you're looking to sell your business one day, I would recommend thinking about the investor and thinking about the person that you might want to sell it to and what they're thinking about, because what they're thinking about might be very different to what you think is important in your business. So the summary is this. People spend more time researching their next computer or phone than they do the next investment. Stocks are a part ownership of a business, so treat it like you're buying a restaurant. Businesses create value and we can measure it with the cash flow that they produce. I think it's really important to find out the value of something and then pay less than that value. And if you can't work out the value of something, I don't think you should invest. And when you're investing in a business, specifically a business, ask yourself these things. What is the quality of the cash that business is producing? What is the competitive advantage that business has? How big is the runway for growth? Like how long can this continue on for? How good and smart are the management team? And what is the price that I'm going to invest at? And is that a reasonable price? All right. Thank you. That's it. Yeah. Let's do questions. Yep. Leo at the end. Go ahead. Yeah, hit me. Let's do it. Yeah. Loud voice. I might have to repeat it, but that's okay. Go ahead. Yep. Okay. So the question was, how did I get the pile of money that I could retire on it by 30? Okay, so it's not really that interesting. Well, for me, it doesn't seem that interesting. It was probably a lot of luck, and I was probably quite naive about what I was doing. I was just in the right place at the right time. I know that seems like a bit of a cop-out, but I'll try to explain. So I was working for a big multinational company called Procter & Gamble, which most people would have heard of. They make Gillette razors and stuff like that. I was working in Australia, and they gave me a car to drive around to my meetings with, which was great because my meetings were quite long distances away from each other. So like there was like 30 minutes or an hour between meetings, and I was doing 3, 4, 5, 6 meetings a day sometimes. So I'd have these big time where I would be driving in the car. So all I did for like a year and a half was just listen to podcasts, like business podcasts, and just learned from like complete nothing, like knew nothing about anything, didn't know what revenue was, I was terrible, to understanding like SEO and understanding all the different business models that entrepreneurs were doing all over the world, what they were leveraging on the internet. And I realized quite quickly that from my job at Procter & Gamble that I hated having clients. Like client businesses suck because the client they're so demanding and they're so annoying. Like I wish I didn't have clients that I could just make the money without having to deal with people. That's how I was thinking at the time. So I was like, okay, what business could I start that I was looking for a business that wouldn't have clients. So I stumbled across through one of the podcasts this idea of selling, like, I guess it started from like hearing about what drop shipping was, which everyone would be quite familiar about drop shipping. Didn't quite fit with what I wanted to do. But when I sort of figured out that Amazon was sort of really just starting to get going in America, and it was really a lot of customers were going to Amazon to buy their stuff. But as an Australian, I could even sell things on Amazon. I figured out, I'll just try sell some stuff on Amazon and see what happens. I focused down on female fitness equipment for the only reason was that I thought that there was not very good products in that space on Amazon. And And yeah, I went on Alibaba. I found some products that I thought would sell from fitness equipment stuff. I bought it. I sent it to America, not knowing what I was doing. I was like spending way, like making so many mistakes along the way here. Got to Amazon, and it actually started to sell, and I couldn't believe it. This was way before this FBA stuff became popular. I was like in a really nice position that I was really hearing about this before it was super competitive, and it's like I wouldn't do this now, for example, like no way. But at the time, it was just the right place at the right time, in the right idea. And it started growing, and I was just using that money to go buy more products. And I went to China and I started designing products, and all of a sudden it's making, well, more than $1 million a year in revenue within, like, I'm going to say 2 years, I guess I got to that point. And it was growing, and I was like, okay, I'm going to just start traveling the world, working from my laptop. I think I can do this from everywhere. And I really need to hire some people to, if I get sick, if something happens to me, they will know what to do to run the business. So I got an assistant. I got an assistant for my assistant. And once I had that sort of set up in place, it became really sellable because it was running without me. And I started talking to some like business brokers, and they were saying, yeah, your business is, it's growing. It's in a good niche. It's got a good branding. You've got it set up so that you don't even have to work in it. We could sell this thing. So I explored some options and got a good offer, and that's it. I sold it. And for the first time, I guess, in my life, I had a lump sum in my bank account. So then I was like, okay, while I was running this business, I was just fascinated with investing anyway. Like the Warren Buffetts of the world, the Peter Lynch's, the guys who had figured out this idea of investing into businesses and being able to do it for long periods of time and making huge amounts of money. I got fascinated with that, and I just knew that was the path that I was going to go down with my money. It felt the safest. It felt like the biggest upside. It felt like something that I could do. Retirement is not the right word. I would say I went on sabbatical, which means like I took a time off work because I didn't have to work. But every day I'm reading, I'm studying businesses. I love it. It doesn't feel like work. So I actually feel like it's retirement for me now because I would naturally be doing this regardless. And I joke with people saying, yeah, I retired at 30, but I don't think we ever retire if my brain is still functioning. So there you go. Did that answer the question? I don't know if it didn't. Cool. Yeah, hit me. Yep. So the question was about like what niches have good multiples, bad multiples, like why? I guess that was kind of the question. Okay, so I would say that based on the criteria that I just used, like longevity of, good quality cash flow that's coming in, that it's reliable, it's recurring, it's all of these things. It really comes down to, I think, how durable that business is. Can that business continue to grow for a long period of time? If that is true, right? If I was to say that it's true, it is worth a lot more, regardless of the niche that it's in. If that's a software business, great. If it's a laundromat, no problem at all. If it is a restaurant, no problem at all. But it would have to show those things, right? So I think a lot of SaaS businesses can get valued quite highly because they generally tick a lot of those boxes, just by the nature of the industry they're in. So the question is then how confident we are that can continue. For a business like, let me give you a SaaS business that I think is not so strong. That's going to be tough for me to pull off the top of my head right now. There's a company I've invested in, which was a bad investment that I made in a company called Redbubble in Australia. Redbubble is a marketplace for artists to sell their art, essentially. And if I wanted to buy like a gift for somebody, I could have someone's art printed on a t-shirt and sent to them. It would be it's quite unique. Great place for artists to make money. The thing is, I was like, oh, this is an amazing business. This is a great place it helps the artists, it helps the customers. It's really cool. But what I didn't think about was that it's pretty easy for someone like a customer like me to go to Etsy, and buy something from Etsy. It's pretty easy for me to go onto Amazon and buy something from Amazon as well. Even though this is unique, it's not unique enough, I don't think. And that's probably where I made a mistake in making that investment. I still have that investment, and I think it actually will be okay eventually, but it's just not as good as I initially thought. And that company has had multiples like thrown at it when it was like in COVID times where everyone was buying everything online. The business valuation was like 7 times revenue and like 50 times profit, which can like, because it was growing so fast, everyone was like, oh, this will continue on in the future. But like that would have been a bad call to make. So every niche can have really good businesses inside of it. Like I would argue that a laundromat, for example, seems like a super boring business. But if it had really good contracts with like lots of great hotels, if it had recurring revenue because they were doing they had these contracts in place, they were able to continually increase their prices and no one would worry about that. That could be a beautiful business, and I'd be willing to pay, if it has a great history, all these things, I might be willing to pay 5, 6, 7 times profit for that. Whereas the restaurant, I might not even pay 1 times profit. It just depends. But there would be restaurants that are so good that just print money, that are amazing. They've got this unique thing about that restaurant that doesn't look like that's been lasting for many, many years. It could be a really good investment that I'd be willing to pay 5 times for as well, 10 times. It really just depends on whether the business hits those criteria more than the niche. Sorry for the long answer. Questions? Yeah, so the question was, how do I research the relationships between the shareholders themselves? So between the owners in a private business specifically. Yeah, yes, correct. That is like one of the most important things. Is I even have like here on that list was I have to like check the management. So that is the other owners of the business, the relationship they have with each other, the relationship that they have with potential investors like me. How do I actually do it? I've had this question before, and there's no exact way to do it that I could teach you. It's like a gut feel kind of thing. Like you've got to. I think of it a little bit like this. If it's like a younger person than me, I don't have children, but would I want this person marrying my daughter or son? If that's how high quality I think that person is, that's the level I'm looking for. I want them to be like super honest. I want them to be not full of shit. I want them to be not bragging about how good they are or telling me what celebrities they know or how impressive they are or whatever. I just want them to be like, I could have a beer with them at the bar. We could talk. We could be friends. Like they'll tell me the truth. Essentially the same way as I would look for a friend in somebody is, do I feel like they've got my back? Do I feel like they will tell me what I want to hear, even if it's going to hurt my feelings? Like, it's the same qualities that I'm looking for in a friend or in any sort of long-term relationship. You have to vet them the same way. And the only way to do it is by spending time with them, listening to what they say, watching as much. If they've got a private business won't do this, but a public business, they will have presentations and they'll be interviewed online by people. I watch a lot of that. If it's a private business, I've just got to have a lot of meetings with them. We got to get out of the business setting. We got to go play golf. We got to go play tennis. We've got to go away for a weekend somewhere. I've got to date them essentially, even if like you're dating with them. As long as it takes. Generally, it doesn't take as long as you think, because I think you get a feel pretty quickly if you fit with that, if that person and you are going to be okay. I think you can normally rule people a lot. You can say no to most people on the first meeting pretty quickly. You get into trouble as if like you're so wrapped up in how amazing the business is that they could show red flags. This is just like dating girls, like, by the way, like this is the same philosophy. A really attractive, good-looking girl is going to be hard to say no to because they're so good-looking and attractive. You've got to really dig deep and really make sure you're making a good decision here if you're going to keep dating them in the future. Exactly the same with a business owner. The business could be amazing, it could be making so much money, it could be growing, it could be doing all these amazing things. But if the person running it is like a bit of an asshole, you just got to walk away. And you know that the long term, that is like, if I'm thinking 20 years out, do I really want that person in my life in 20 years time? If the answer is I'm not sure, well, it's probably a no. That's my way. I don't know whether that's helpful or not, but that's it's the only way I know how to do it. Actually, I don't know of any other better ways. If you've got better ways, tell me, but that's how I do it. I treat it like dating. The question was, do I get other people's opinions, or do I consult to get value to do valuation work? No, I build it myself. Like, I wouldn't worry about. I think consultants are full of shit generally. Like, a lot of them are just university students. They've got great theory, but like real world experience is lacking. They have their own biases, their own opinions about things. Like, I don't trust consultants, generally speaking. I don't know. That's just my nature, though. So I would read research, though, from other people happily. And I would want to get a feel for whether I think what they're saying is logical and makes sense, or is it bullshit? So, but I would never hire consultants to come in, or pay someone to do valuation work or anything like that. It's not that hard, I don't think. So I don't feel like I need that level of help. I know, like, big companies and stuff like that, when they're doing a merger or an acquisition or something like that, they hire KPMG to come in and like whatever to do, the mergers and acquisitions. That's what they do. They're doing that because I actually don't know. I don't think it's necessary, but that's the way the world works. Let them. That's fine. I don't feel like I need to do that. The question was, is a P&L more important than a cash flow statement? P&Ls, cash flows. Some businesses will have bad P&Ls, but great cash flow statements, and vice versa. Every business is different in their own little nuances. So Amazon's a great example. For 10, 15, well, nearly all the time that they've been running, terrible profit and loss statements. Like, it looks ugly. They're making a loss financially every year. But that business is not making a loss. It's because they're booking things as a loss because they're spending so much on their future planning and their future, their data centers and whatever it is that they're expanding out into. It goes into the profit and loss as like, as an expense. But if you take that out, you look at the cash, they're printing money. They're making billions and billions of dollars. You've just got to be smart enough to figure that out. It just depends on the business. The more businesses I research, the thousands of hours I've put in, I guess you get a feel for that pretty quickly. You go, okay, this is the type of business that I'm looking at. Their expenses. What are those expenses? Are those expenses fair, not fair? I have to reconstruct their own paperwork sometimes. Good question. That was quite a specific thing that I do, but like, it's not super necessary. But when I am studying a business, that's what I look at too. Yeah. Like a return on investment. My investments. Jeez. Okay. So, what do I think is okay? Okay. So the best investor of all time, Warren Buffett, has done 20% per annum for 60 years, right? Average. 60 years. Some years he'll get 100%. Some years he'll get minus 20%. So it fluctuates. 60 years at 20%, 20% per year for 60 years. So that is sure. Well, I hope I do, but I think in the stock market, if you can beat 15%, you're exceptional over a long period of time, right? I think in a private business, you should be able to do a lot more than that. Well, if I'm willing to pay only 5 times profit for the business and the profit is stable, well, then that's going to be, what's that, 16, 17% per annum compounded, I think, 5 years. I can't do that math. But if I might find a business where I can pay 3 times its profit and it's growing, well, then I'm looking at potentially 30, 40, 50% per annum compounded over that period of time. That would be attractive. I think I could start businesses and get thousands of percent per annum because you're starting from a small base. I'm starting with a couple of $1,000s and I'm like, okay, I want to turn this into $100,000, $200,000, $500,000, $1 million within a couple of years. Obviously, because I'm starting at a low point, going to a reasonable number, that's significant like growth. So it depends. Did that answer? I'm sorry to give you like, I can't give you like a hard number because it just depends. Depends again. Wow, I'm going to say depends a lot, aren't I? Just like a business, does the real estate, the property that you're selling, have a competitive advantage? Like there's so many villas that are getting built right now, and so many like nice like luxury places that are coming up in Bali like all the time. Why is your luxury villa different to all the other luxury villas? It just depends on then. I don't know the market very well. I would want to know things like supply and demand of the market. I don't know the industry very well. It's hard for me to sit here and judge. From an investor's point of view, I don't think it has big upside. Like I said, like I could start a business for very little money, and I could be making hundreds of thousands of dollars per year within a year or two if I did a good job. Real estate, like if I'm buying a house, waiting for it to grow in value over 5 years and then selling it again, I think that's probably not the right play, personally. I think you can have a lot of risks tied up into like a particular street, a particular region, a particular city, a particular country, whatever. Like most of us are from, like lived in Kiev, for example. If I had an apartment in Kiev and I only decided to invest in apartments in Kiev, well, something dramatic could happen because I've only got real estate investments in Kiev. I have an issue if something goes wrong with Kiev, like a war, for example. But if I had an apartment in Kiev and one in Dublin and one in New York and one in Australia and one here and one there, like, you know, and I had different places, all of a sudden together, that makes it a little bit better of an investment. So it sort of depends on what the strategy is. I think property development can, like people who are going out and finding cheap land, building really nice places, increasing the value, that's more of a business than it is investing in real estate. But notoriously what happens with that is it's a lot of money up front, right? You have to spend all this money and you get paid later, generally speaking. So like in one of my examples, it is a lot better if I get paid first and then I go out and build, or I go out and do the thing. That makes the business a lot more safer. So my answer to the question is depends how you're running the business. And I don't know the market very well. So apologies for not giving you a great answer. Great question. The question is, I didn't quite explain that very well. The question was like, if I do all this work, why would I only invest 5% into a business? What I was referring to my net wealth. So all the money that I have, all my investment money, I would only want to put into one particular business, about 5%. That's what I feel comfortable with starting with. That's just my own personal preference. But that might be an ownership of the business. That could be, if it's a private business, that could be half the business. But it also could be, if it's a big public company, less than 1%. It just depends the size of the business that I'm investing in. So 5%. When I said 5%, I meant from my total pool of money. Does that make more sense? Yep. So the question is, I said like Warren Buffett had done 20% per year for 60 years on average. But what would be comfortable for me for say 1 year? For this particular year. All right. So yeah, I don't really care this year because it's not about this year. It's about 10 years time, 20 years time. I don't really care. Like last year, my portfolio got punished, like down 30%, but I'm already up maybe 30 or 40% this year. I don't quite I keep track of it and I don't remember the numbers because it doesn't really matter in the short term. I'm really just looking at the companies that I've invested in. Are they getting bigger? Are they getting better? And if that's the case, great. I don't feel like I have to stress too much about my specific return on investment this year. Oh, okay. In my long-term investing career, I would like to think that I'm not going to, it'd be tough to beat Warren Buffett, but if I would like to think that I'm aiming for 20% plus per annum. 20. That's what I would like to go for. That's over a long period of time. If I can go anywhere near that, I'll be very wealthy and I will never have to, it won't be a problem in my life, money. So if you understand the idea of compound interest, like 20% this year, and then 20% of that 20%, and so on. It goes like that very quickly. So but it just takes time. Those first 10 years, you don't feel like it's moving, but the next 3 years, that's where all the growth comes from. And then the longer time horizon you can think, the better it's all going to be. And so I'd like to think, I'd love to put my benchmark at around about that 20% mark, going, that's the goal. Some years I go way more than that. Some years I go way less than that. It totally depends. Like this year, for example, my Japanese investment has gone up like 180% or something like that in like a few months. And like, that's awesome. But then I have other investments that are down 10% or whatever it is. So it's all a bit, the short-term stuff is messy and wild, but I try to just keep thinking 10 years time. Oh, I can't help you. Sorry. The question was, like how could I like help you if someone came to me? I don't have a good answer for that. You could come to me with a company that you're researching and going, I'm doing this work on this particular company. I found it to be great in these aspects here. This is what I'm thinking. This is where I think it's going. Like, you've done the work, and then you say, well, what do you think? Like, does this make sense? What am I missing? What am I overlooking? Because I've just looked at so many companies that I probably have an idea of something that you might not have thought of, but then vice versa as well. Like, having the YouTube channel has been exceptional for me because I present my findings and somebody out there will go, oh, have you thought of this? And I'll be like, no, but thank you for telling me that, because now I will go and figure that out. And it turns into this like sounding board, like you get 90% of the businesses that I've found have been from somebody recommending it to me as well. And I think other investors that I talk to, the sharing of ideas is really valuable amongst each other. Not only for what am I missing, what am I getting wrong here, but maybe I've got onto something really good here. And the questions you could ask is, I've done this work, like, what do you think? That would be the type of question that I could help with at some stage. It wouldn't help me if you've done no work and you just say, oh, I want to invest in this business. I'd be like, I don't know anything about it. Like, you got to tell me what you've already done. So I guess that would be some way. I think if Natalie, you just said, like, how do I, like, the short term though, like, I'm thinking this long term, but like, if I didn't have the money to invest, like, what would I be doing? I'd be starting a business. So if that is I think the biggest upside, the biggest return on investment would be starting a business of your own, growing that to either potentially an exit or growing that for its compounding ability to grow and grow and grow. I think that is the best use of your time. If you're not thinking about the investing world, put all your effort into growing a business, because that's how you create wealth. Just like I said, I'm looking for businesses that are creating wealth, and you do it by starting businesses. So I think that's step one: start a business, grow a business, understand the business, get really deep into the business. Step two would be use the profits from that to invest in other places, other businesses that you understand. Yeah, and start taking your wealth from this one particular place, which is the restaurant or business that you're building or whatever it is, and exploring other options with that as you grow. So that would be my advice to anybody who would love to invest but doesn't feel like they have the money to do it. Yeah, I've even thought about like potentially doing like angel investing stuff, where people come to me with like whatever business they've thought about and gone, hey, I'm starting this or I'm doing this, and like, is there any like it would be, maybe I could invest like 10 grand or 25 grand or 50 grand or something like that into a potential business. But essentially all the stuff that I like mentioned today, they're the things I'm looking for even in a startup. So like, I was thinking of doing something like that just for me, so I could like try to find more businesses to invest in. But it might be fun to not do it from that angle, but more like I'm looking into this particular business, or I want to buy into this business as other investors. That would be cool too. I don't actually recommend going down the angel investing path, but yeah, anyway. I understood the question to be, every industry has different margins. So a restaurant or a hotel has specific like profit margins for their business. Am I comparing between industries, or is that what you're kind of asking?
IT businesses will be different.
Yeah, correct. So bigger margins is better, as simple as that. So a SaaS business, right? A software business that has 3 guys working, but they serve, all the biggest companies in the world, that is going to have huge margins, like 80, 90% margins. That is extremely more attractive than the hotel, no matter what, because it's just the margins. Just straight up, it's a better business. If I was too scared to invest in something like that because I have no idea what's going on, I don't know code, I don't know those customers, I don't know that product, I don't know if it's going to get disrupted, but I knew the hotel business really well. Well, then I could compare between hotels. So the Marriott versus the Ritz-Carlton, I could say, okay, the Ritz-Carlton makes 30% margins, the Marriott makes 20%. That's a nice comparable that I can make between. But then I want to look at things like profit per employee as well. So if this place has 200 employees, this one has 100, but it depends on how, like, there's lots of metrics I could look at for the hotel game. I am not that into the hotel world because I don't have that experience. Maybe that's something that I should explain is there's so many industries and so many businesses that I don't understand, right? And I will just not invest in them unless I really want to put a lot of work into. So like I might know 10 to 20 business models really well, and maybe 10 to 20 industries really well. But there's hundreds of industries and thousands of different businesses. If I don't know what they are, I'm not there yet. So as I improve as an investor and I look at more and more businesses and industries and companies and dive deeper into them, eventually I will understand the hotel game more because I will look at it like closely. But if you're in the hotel game, you have a big advantage over me because you know the hotel game. You know what how a hotel works, you know what's good about it, what's bad about it. You said it's all about the people. So you could go, okay, I'm just going to go and find out I know exactly the type of people I need to talk to who work at the hotel. If I get them drunk and figure out how actually happy they are working in that business, maybe I could get a big advantage over an investor who has no idea how a hotel works. So we all have our own advantages. So I'm trying to build up advantages in lots of different areas, but there's so many more I don't know. If I was a photographer, which I'm not, I don't know the photography industry at all. Therefore, a photography business would be really hard for me to invest in. But if I was a photographer and had a photography business and sold a photography business, I would really be on top of that business. So I would recommend staying in your lane for a while and slowly adding skills as you go. Okay, do I think an average person could easily could build wealth on dividends? I guess yes, possible. What's wealth though? Like how much wealth are we talking here? Like they could make more money than they currently have. Yes. Are they going to get super rich and like set themselves up and their family for the rest of their lives? Probably not. Yeah, I will argue very strongly against dividends in dividend investing, but that's because I feel like I have a way of looking at it that not everyone agrees with, and I'll explain it really quickly. Dividends, what a dividend is the profit of the business going to the owners, right? So like that's great if the business is making $1 million a year, there's 10 owners, everyone gets $100,000. Away they go again next year to try to make $1 million again. That's great. Good on that business. You make $100,000 a year. I don't want to go anywhere near that business because that money, right, the next year, they're probably only going to be able to make $1 million the next year. But if they took the $1 million from the year before, don't pay me anything, reinvest that back into the business to grow, next year they might make $2 million, right? And I would much prefer to see that continually grow like this rather than paying it out to me, because I get that money. I have to then go and find another investment to invest in anyway to see if I can get that return. So it all depends about what they call in the investing world, we call it return on invested capital, right? Which is the money a business can invest in itself to grow further and further and further. If the business can do that, right, I want them to keep the money in the business and do that, right? But if the business can't do that, if it has no options to expand, well then, yeah, okay, I'll take the money, but I'm not that happy with it because I got to go find another investment. I'm probably going to get taxed on that money. There's all these problems that are associated with the dividend. It's really not that great of a business. A better business is going to be one who has a great management team who know how to invest that money to get bigger and bigger and bigger so they can turn $1 million into $100 million in 15 years. That would be far cooler than just my $100,000 a year. Yeah. So I'm not a dividend guy. Okay, question is, what do I think about commodities? Do I think it's a good time to invest in commodities right now? I have no idea. Like, absolutely no idea. Like, firstly, I don't think like trying to predict something in a short time frame like that, like this particular year, no idea about any investment that I make that this year is going to be a good year or not. No idea. But I feel very confident that over a 10-year period, my investments would do well. Gold, silver, copper, uranium, no idea. Like there's so many market dynamics in play with all those industries. You would have to get really deep in that space and really focus on what the supply is going on. So for example, if there was going to be issues with oil is a good one, for example, if I understood that there is going to be a limited supply of oil, but demand is still going to be strong, well, maybe that there's an insight that I know that not everyone else knows. Maybe I could invest in something like that. I found all that stuff way too difficult for me. I'm not smart enough to figure that out. Just, yeah. So that game's a bit beyond me. I know people who are in that space. I don't really see much benefit because I don't see, if I buy an investment in gold hoping that the price doubles in a year's time, that's nice. But I would much prefer to see my investment go up 100 times in 10 years. But that would be that's serious wealth creation compared to just doubling my money now. So I tend to just naturally prefer to go for that bigger prize. But I have to think longer term for that. Yeah. Chasing trades like that, like short-term stuff, trades in commodities or anything, is not for me. Yeah, it's too hard. And I have to keep doing a trade. Like you might hit a winner and then I have to keep looking for another investment. So sorry for the long answer. I know you wanted a yes or no, but I had to explain. Yeah. You would like to know a fun fact about me? Okay. A fun fact about me is that I am... 3's too many. You don't need that many. Too many. Fun fact, I am... as a hobby, I'm a big tennis guy. Like I love playing tennis. I watch quite a lot of tennis. My family play tennis. I just like tennis. I don't know why. It's just my thing. I just find it fun. It's even like a bit meditative because you go out there and you just focus on the ball and you're just playing this sport for an hour and everything just disappears. And I just like playing tennis. So tennis is my thing. What did I do? I was in sales and marketing there. So I was going to have meetings talking about like, I was a teacher. So before I worked at Procter & Gamble, no, just a straight child teacher of little kids who are 11 years old. Oh, no, I loved investment in business. And I was constantly reading, learning all I could, even as a teacher, all the way from high school. So I even like my first real business, like not a real business. The first business I ever started was, I'm from a farm in Australia. And I convinced my dad to sell me some of his baby sheep, right? And I saved up some money. I bought these sheep off my dad. And then I paid him for like renting the land so my sheep could eat the grass. And they got fat. And then I sold them. And I would double my money every time I would do this. And this was like my first little bit of pocket money. 14? Yeah, I was about 14. And I just was super into making money, doing business stuff. I would work on the farm like as long as I could because I was getting paid by the hour. So I was like, I would work and work and work and work because I just liked making the money. The last investment that I've made, I don't know. It would have been this year. I think I made an investment back in an industry that I've been really quite deep in for 6 months now. I think it's getting really overlooked. I think it has a lot of stigma around it is the cannabis industry in America. I am quite pro cannabis because I think it's really good for a lot of people treating cancer patients and medical reasons. And I think it's completely harmless for anybody who's just using it anyway. So I don't like the fact that it's completely illegal in America, but there's states in America where it's completely legal, like it's fine. So there's this weird thing where these businesses are doing a really good job of like producing high quality, safe cannabis in America, doing a good job of the whole process. But there's the federal laws make it really challenging for them to make profit. I've been in the cannabis world, just very deep into that industry for a while now. And that was my last investment. I invested in a cannabis company. I'm going to say 3 months ago now. Yeah. So I follow that really closely, and I've got a lot more work to do. I'll add to that position hopefully over time. It's just you won't know this, but the cannabis market has gone from like in 2020 to like 2020, 2021. The valuations in that space were like crazy high, right? Like people were paying these huge multiples of these businesses, and then the last 18 months, it's just completely crashed. And it's a good thing as an investor. That's why I like the stock market, is because you get these wild swings sometimes. And if you know what you're doing and you know what to look for, you can take advantage of the fear in the market. And for some reason, people get really scared and they don't understand what they're actually buying. So I've looked into this industry closely lately. Yeah. I mentioned this book earlier. The first place I would start is called One Up on Wall Street by Peter Lynch. I've listened to that book multiple times. Every time I listen to it, I still get some value out of it, but it's really well written to a person who doesn't know much about the world at all. One Up on Wall Street, highly recommend. Please start there. That would be point number one. There's a book called, it's a bit more about, probably more about the philosophy around investing, and I think it's just a good book to read. It's called Richer, Wiser, Happier. William Green's like my favorite author. He wrote this book. It only came out a few years ago, but it's exceptional to get sort of the idea of like how you can make a lot of money and still be a really good person by investing as well. And it's quite cool. And then there's a book by Phil Town and his daughter, who I'm blanking on the name, but they wrote this book specifically for like new investors, and even tailored it towards women a little bit. A fun fact is that women are actually better investors than men generally. Women are better because they're not going to chase greed as much as men. They're not going to get sucked into the hype. They'll do the research. They'll be thorough in their understanding. They'll wait for the right opportunity. They'll be patient. And when they invest for the long term naturally, because they don't care that much about following it every day. Whereas I am looking at the stock prices move, and people get sucked into the whole, like, the world of investing. But women have a better temperament for investing, generally speaking. So, yeah, anyway, generally speaking, if you've got girlfriends or wives, you should give them the account because they'll be better at it than you probably. So yeah, anyway, that's just a little fun fact. Is there any more questions? I'm sorry this is going for so long, but I hope this is still of some interest. But I think are we good? Cool. All right, thanks, guys. Thanks, everybody. I appreciate you even just holding concentration for that long. I felt like that was way longer than I was expecting it to go for. And but I appreciate everyone's attention and the questions, and some really great questions. And I hope I helped you in some way. Thanks.
Thank you.